Hello, my name is Kevin. Welcome to the next video of my small time investing video series. Disclaimer, I am not a financial advisor. I only do small part-time investing casually for fun. There are many things I don't understand in depth. So there could be a few things in this video that are inaccurate. This video is about buying call options. So buying call options generally has a risk level that is higher than buying its underlying stock. If you want to be profitable, that is. So if your risk tolerance is low, then buying call options is not right for you. Buying the right call options can also enhance your profits over just buying underlying stock at a higher risk. So keep that in mind. So for call options, when the stock price goes up, the call option value goes up. When the stock price goes down, the call option value goes down. This benefits you because you can buy the right call option at the right timing when the value is low. See the stock price and the option value go up and then sell the call option for profit. And you don't have to buy underlying stock of the company at all. So this is good for you if you want to potentially gain some profits on the movement of the underlying stock. If you don't have adequate funds to buy much of the underlying stock, or if you don't want to buy the underlying stock for whatever reason, you can consider buying a call option instead. If you actually want to buy 100 shares of the underlying stock on a future date when the call option expires, because an option is a contract, as I mentioned in a previous video, that involves 100 shares, okay? So you believe the price of the underlying stock is going to go up from today. This benefits you as well because you will potentially be paying below market value for the underlying stock at the call option's expiration. So after you bought a call option, you can let it expire in the money and exercise the option to buy 100 shares of stock, underlying stock, if the option is in the money. And I'm just going to discuss what in the money means in just a second. You can sell the call option if it's profitable, likely in the money, before the call option expires. This is what most people do when they buy a call option. So when the underlying stock price is higher than your call option strike price, your option is said to be in the money. So stock price higher than the strike price of your call option. So this is good for you. You can exercise the option to buy 100 shares at expiration if you so choose. So when the underlying stock price is lower than your call option strike price, your option is said to be out of money. You cannot exercise the option to buy 100 shares at expiration. So that's what it means when people say your call option is in the money or your call option is out of money. So if your bought call option is not profitable, it's likely not going to expire in the money. Okay, so you could do nothing and let it expire worthless. I've made the mistake of losing more money and paying commission selling it rather than letting it expire worthless. So that was dumb. If your bought call option is profitable and it expires in the money and you don't have adequate funds to buy 100 shares of the stock, it will still expire worthless. So, and you will lose your potential profits from not selling the option before it expires. So you want to, so that's not good for you. You always want to sell that call option for profit before it expires in the money. In this case, where you don't have adequate funds to buy 100 shares of that stock. Now, this definition of in the money and out of money applies to call options only, not put options. So, picking the right call option to buy is almost always picking a strike price that isn't too extreme. Like my examples, not above examples, actually following examples. So I'm gonna talk about that soon. Pick the right strike price and the right expiration date that you think will give you profit. So, and that's only half the battle if you're not intending to exercise the call option at expiration. So the other half of the battle is knowing when to sell it for profit at maximum value. And I've made mistakes not selling profitable call options with a risky underlying stock, and it turned the wrong way and became unprofitable before expiration. So that's a caution to not be greedy. You know, if you're looking at profitable call options on a risky stock. So which call option you buy depends on how much risk you want to take. So here's my example. I'm going to use GameStop as an example on the right. Again, this is all US dollars on expiration date of January 10th. These are the call options here on the left side of this table. So the stock price right now is $31.57 at the time of this video. So the safest option you can buy is a $5 strike price at about $26.60 mid. And you multiply this number by 100 again. It's expensive, and your option will most likely expire in the money because there's a good chance GameStop will be higher than $5 strike price on January 10th when it expires. So, however, I doubt your profit margin will be very high if you choose to sell it before expiration. So, and if you exercise this at expiration, it's a bit pointless. You're paying $26.60 plus a strike price of 5 times 100, so $500, which equals $3,160 plus commission. Well, right now with the stock price at $31.57, and you could just buy 100, and you're paying $31.57 plus commission right now. So buying this option at $5 strike price, this call option, this is pointless. So I wouldn't recommend buying this at all. And to my next example, there's a call option with a $65 strike price at about $6. Okay, it's pretty cheap, right? And your option will most likely expire out of money because the stock is unlikely to go from $31.57 to $65 on January 10th. So your option will not have value. You would just be giving Wall Street $6 for free, and you're paying commission too. So don't do that. So that's what I mean when I'm saying you want to pick the right call option here at the right strike price, at the right expiration date, to be profitable. And knowing which one to pick, that's the hard part. And there's people that get paid a lot more than me to figure that out and be consistently profitable. So I can't. So unfortunately, I don't have the secret sauce to teach you guys how to pick the right options to buy call options. So that's all I have for this video of buying call options. And yeah, next video will be on selling call options. So thank you for watching.